Hello everybody and welcome back to MarketWiz, and today I'm going to teach you about the standard deviation, and this is the episode 13 of ICT Pyramids, where I'm going to teach you the ICT concept in a most simple way. So what is standard deviation? Standard deviation basically is a Fibonacci that we use to identify our take profits. This is my setting. You can copy that as well and take some sort of screenshot. Now, why we use standard deviation? The reason is quite simple. A lot of people during trade, they get FOMO or they get feared that if market is going to return and they're gonna get break even or stop loss hit. So why we use the standard deviation to identify our fixed take profit that we can use as to take out our partials, or we can use them as to take out our 70% of the trade, I'll say. Alright, and then you can let the other trade run. That's how we use a standard deviation to identify our take profits, so that we don't get FOMO and we know that where is market going to go. What I'm gonna do, we're gonna take the standard deviation. Now I'm gonna explain both bullish and bearish scenarios, that how you can plot the standard deviation in the market and how you can get some good results. So now I'm plotting. I know that we have this huge move toward the downside, and now I know we're gonna move toward the buy side. What a lot of people gonna do, they're gonna target this buy side area. They're gonna think, and as you guys can see, we just missed this. We just missed that buy side liquidity with around 1 to 2 pips, and the whole trade just rally back. And either you're gonna get stop out in this trade, or you're gonna get break even. So if you use your standard deviation over here, you can get some good results. So how you gonna place the standard deviation? Now this is your advanced order block over here. Alright, and this is the indecisive candle. Like the last move, we took these sell side liquidities over here, and then we moved toward the buy side. So how we're gonna use it? We're gonna take the standard deviation, we're gonna take the high of this order block, and you can use the wick and the body as well if you like. Alright, if you're gonna use the body, it might be a little bit short, but what I do, I use wick as well. And what you're gonna do, the level of 2.618 will get tapped each and every freaking fucking time. Keep that in mind. The level of 2.618 is going to get tapped each and every time. Alright, now I'm going to show you some other examples as well. So like we have over here, this is the trade. We move all the way down, we swept the sell side liquidity. Now I know we are going to move toward the reversal after this IFVG, and I don't know that where I can put my TP. That will be guaranteed that it is going to get hit by the market. So what I'm gonna do, I'm gonna take my standard deviation from the high of this last swing high, the last intermediate swing high, and the last low, and what we see, the 2.618 level is getting tapped. Now again, I'm gonna move towards some bearish examples over here. How you gonna take your trade? Now this is the last swing, which is formed before market moving down, and this is the area that have major also importance in the market, and which caused the market to move down, because this is the CISD and this is just accumulation. So you are not going to take this area. What you're gonna do, you're gonna take your standard deviation from this low to this high, and what you're gonna see, boom, the 2.618 level is getting tapped each and every time. You can target these areas, but I'll suggest you to go with some seasonal trading days or seasonal trading months, because when there is high volume in the market, you're gonna see these areas getting tapped also. But you have to keep that in mind, that this is your partial, where you can take your 70% of your trade out and just let the other 30% run for this area. Right, that's how you manage your trade. I'm just gonna give you the last bearish example and then the video will be done. So this is the last swing high and this is the last swing low, which caused the CISD in the market. So what you're gonna do, you're gonna take the body from here to here, plot this over here, and yep, you get tap, a beautiful tap over here with 2.618 level. That's how you trade. And now if you see, you're gonna see a beautiful confluence that you just tap the equilibrium of this FV. So what you can do, you can place your entry over here. You're gonna take your stops above this 0.5 level and you can target this 2.618 level. So it's like 80 pips trade. Like, come on, this is one of the best trades that you can get each and every time. And you can take out your 90% of profit over here and you can just target these areas by running the other 30%. This is how you use your standard deviation, and this is one of the best tools that gonna make your trade better, they're gonna make your psychology better, and you are not going to get FOMO, and your brain will be clear that okay, this is the area where I wanna get my partials, I'm gonna get my 70% of trade out. Alright, this is the area that is important for me. Each and every time you're gonna get 2.618 level hit by the market. You can just backtest this, you can just go and practice as much as you can. Alright, and there's one thing I want to let you know, try to use the standard deviation in high volume times. I also created the video on kill zones, you can watch that as well. They're gonna help you a lot. Alright, so you're gonna know that when you have to use the standard deviation. Alright, thank you so much guys, we just hit this 50 subscribers. I want to really do appreciate who have ever subscribed this channel and ever contributed in this journey. Thank you so much. I'm gonna meet you in the next video. Have a good day.